After the first two classes of turtles from 1984 and 1985 came to an end, it was clear that anyone could learn trading commodities with the right teacher. When the experiment stopped, one of the most successful turtle traders, Jerry Parker, had founded his own company, Chesapeake Capital Corporation, in 1988. Sometime around spring 1987, just before the completion of the original turtle trading program, a chance encounter saw another man named Salem Abraham learning turtle trading from Jerry Parker. Salem Abraham, born and raised in Texas, was attending Notre Dame College, and was diligently working towards creating a mail-order business. Both men were attending a wedding around this time, and when Salem asked Jerry what he did for a living, the answer changed his life forever. Jerry spoke about the turtle trading experiment, how he used to live in Virginia and had to relocate to Chicago, and how he was rescued from living a normal, boring life by Richard Dennis. What interested Salem was that Jerry told him the odds were in his favor when he was following patterns while trading. Jerry also spoke about the millions of dollars the turtles were making, and that made Salem change the whole trajectory of his life. Despite not having any previous knowledge or background in commodities, Salem had a new goal in life: to master trading. Equally important to note is that Salem did not have access to hundreds of thousands of dollars that Jerry Parker and the turtle traders had. This is why Salem Abraham is seen by many as being a greater example of the average, everyday man being able to trade commodities. He didn't have the luxury and assurance of being able to lose other people's money. Although he had expert advice from Jerry, Salem had no safety net to fall back on. He quickly learned from his mistakes after losing thousands in October 1987 due to the stock market crash. Not giving up, he earned his lost money back and then some when the markets rebounded in November and December of that year. Even though Salem was still new to trading, his brothers still gave him money to trade with. He asked his grandfather to give him $30,000 so that along with his brother's money and his own money the total would be $100,000. His grandfather, who was skeptical of Salem's trading abilities, agreed but stated that if they lost half the money, meaning the $100,000 went to $50,000, Salem would quit trading. Talk about a risky situation. Not only was his own money and those of his family members on the line, but his trading skills were being tested, too. It was do or die time, and the money shrank 32% to $68,000. His grandfather derided Salem, saying it was just a matter of time before his trading career ended. Although the beginning of May 1988 provided Salem with losses, the latter half of May started to see him gaining on soybeans, corn, and wheat. He started to see the results of his perseverance in trading commodities. Even his doubtful grandfather congratulated him on beating out a professional fund run by the Commodities Corporation. Salem called up the Commodities Corporation. Even though his track record was less than 1 year, he was able to secure an interview with 2 of its employees. When one employee commented on him being down last month, Salem interjected, stating that this month he was up by 40%. Salem was shooting for the moon. He wanted a return of 100%, or to double his money. The employees told him that the average person would be ecstatic for a 30% annual return and that he needed to take less risk. To help convince the company of his trading ability, he was able to program a trading simulation that represented the returns he would make over a decade. Apparently Commodities Corporation liked what they saw because they gave him a $200,000 fund to invest with. With his entrepreneurial drive in full force, Salem was able to become a millionaire by age 25. The $30,000 his grandfather had invested with Salem was worth a whopping $1.3 million. Amazingly, Salem Abraham would get a chance to become a part of the second wave of turtle traders in the 1990s. Richard Dennis and William Eckhardt were hired by Commodities Corporation to teach a 4-day class to 30 of its employees. Salem gained respect for William Eckhardt, who is often overlooked when people mention turtle trading. Many dismiss him as being a sidekick to Richard Dennis, but that isn't true. William Eckhardt and Richard Dennis got the commodity traders to see that the impossible can be possible. If you flip a coin, you would expect it to land on heads 50% of the time. Yet in reality you might see it lands on heads 65% of the time. This is the same with trading commodities. where prices rise and fall without any clear reason and often in direct contrast to what is expected to happen. To learn more about William Eckhardt, read New Market Wizards by Jack D. Schwager. If you like the video, or see a way to improve this video or future videos, please leave a comment and subscribe.